Good morning, everybody. This is Patrick MontesDeOca with the Equity Management Academy Live Trading Room live streaming from Ticket Tacker. I want to take a minute here just to review some of my data here for a minute and let the platform here catch up to the algorithms for today. So I'm going to just double check and make sure that all the systems are in the right place. We recommended our subscribers to cover any short hedges that you may have at on this correction here. It's expiration day here this week, and so they've been able to get the market down in silver below 28 as the 28 calls expire. The 2750 calls are pretty close to expiration as well. So anything between 27 and 28 pretty much is going to be worthless here. So, but once this expiration is over, it's going to be, I believe, a really great opportunity to get on the long side and even add to your position. We may even get a completion of this signal here as we speak today. So let's keep an eye on this stuff here. Silver is coming in at the buy one level of 27.58. So you want to pay attention to this reversal here because it could happen really fast. Once again, we covered our short positions here this morning as we saw the market come down into that 27.28 level. In fact, we added to the long side. So if you came in short or you are short, it's a great time to be covering and taking profits on those shorts. We are trading 27.62, activating a buy trigger from Silva on the way up. We want to pick up a couple of contracts from here. Buy silver at the market here. It's activating a buy trigger from the buy one level of 27.58. And use any of the 3 stop recommendations that we make. The first one is a dollar stop. Second one is obviously maximum dollar risk. The first one is the most conservative one if it closes below 58 at 7.15. Expect silver to be very volatile from here, up and down. So measure your size accordingly, according to your profile. What we saw here earlier was a capitulation potentially of this correction here into the low 27.28. And upon expiration, as I said, of this options this week here, I think this level should be bought. In gold, we're looking at the daily average of 1800. Right underneath, we're looking at 1789 as the weekly average, as well as the buy one level of 1788, harmonically, almost harmonically aligned at par, basically. 1800 is the daily average, and 1810 as well is the yearly average. So we seem to be trading in an area between 1810 and 1790 approximately as a trading range. And upon getting back up above 1810 now, we are going to activate what I believe is going to be the acceleration of that we've been waiting for in this gold market. $18 and 180. I'm focusing on trading right now because this is a major reversal here that we want to focus on. The interesting thing that I'm looking at here is this descending wedge that's so pronounced. This is the upper end of the wedge, and the bottom end, obviously, you see the market coming down to this wedge of 1759 here on the 19th. And then we've reverted right back up from there, from the area where the VCPMI is harmonically aligning the by 1 monthly, the daily, the weekly average. And I think if we get enough buyers now to buy this correction here, we get through the 1822 level. We're looking at the upper targets, obviously, of 1858 to 1874, which is really my ideal target. You have to accumulate silver and gold at these levels here. If you can't pay the premium that they're asking in the cash market, the only alternative that we have right now is pretty much the paper market. And Eric Sprott from Sprott Asset Management last week, I believe, purchased about $40 million worth of SLV. So we got some major players that are in this market that I believe are looking at the fundamental picture extremely supportive for much higher prices. So this, I believe these are bargain prices, particularly for gold mining shares. We are in a liquidating market in silver as the options expiration takes hold. And we want to just let that filter through the system and see how the market reacts after that expiration, and you know, we can look at the market once again on a directional basis, because I don't think the up targets have been completed yet. So far, we're looking at silver at you know, 28.26 as the sell one level weekly, and right in between the sell one weekly and sell two weekly of 29.15. You know, we're looking at 28.59, 28.97. And of course, taking out 28.97, 29.15, we're looking at challenging the highs that we made of 30.35. And we're looking at about 32, the upper end of this resistance trend line now that we can able to that we are able to formulate based on the previous two highs that we made, is obviously in an uptrend, as you can see. And the market is trading within this uptrend channel, long-term uptrend channel, that points to about 32 as the target for this next attack that potentially we're going to see in the price. 32 is our near-term target for silver. And in the gold, you're looking at again at the 1822 level here, pretty much the wall of resistance that we have that we need to address at this point. We're moving pretty fast back up here, 1807.90, 1808, 1809. We get through 1810. We're going to be accelerating to the upside. I think, and I may be a little premature, but I think we did the right thing this morning by covering our short positions here when we had the opportunity to do on the lows of the day. With regards to Bitcoin, it seems that we've gone into a bit of a correction here after making a high of 58.22. Although there's been a lot of interest here this morning with the market coming down to 42 and it's at 47 already. It is really a wild market. I'm looking for the gap at around 39.40 to be filled before I get interested in potentially getting on the long side, because the market can still come down all the way to 30 and still be in this major uptrend channel that it's building. So I'll wait patiently, and I'll let everybody else here take the juice from here, but I'll wait for my numbers to kick in. I think there are a couple of things that are coming out this week. I don't even want to even comment about all this stimulus talk that's going on, because it's so already factored into the market. You know, even the grocery store guy talks about a $2 billion package, which is like up in the air and it's politicized, and there's really nothing that's being done. I mean, so I want to leave that for the you might say chatter in the marketplace, but I want to focus basically on what the market is telling me. from a mathematical point of view. And what it's doing right now, obviously, it's saying that even though this chatter now, is going on, and ideally, where do you get in? How do you make money as a self-directed individual? And as I say in my videos here, for the past couple of years, I use the VCPMI code written in C++, which is available in TradeStation. But I reversed the engineering process to accommodate the way that I want to manage the account. Because if you allow an algorithm, obviously, or an account to trade, just from an algorithm base, directional, it's one-dimensional. It only tells you, buy. It tells you where to buy, where to sell, where to put your stop, and whatever the market does, it does. And if it takes you out, or if it, activates the numbers, then the algorithm will take you out. But it doesn't give you the flexibility to take a look at the signal from an exponential way in terms of how you manage it or how you apply it as a GPS for your portfolio. When we're talking about the gold market and the silver market, we're talking about possibly one of the best opportunities in our lifetime. And I'm not just saying that lightly. What we have seen here is a historic situation with a pandemic, with the collapse of the economy, with interest rates at negative. And I don't see anything in the near term that is going to change drastically enough to essentially change what already has happened. The damage has already been done, and I think the opportunity here is that we are moving into a whole new system. We're moving into a whole new monetary system. And it's highly virtual. We separated from the real economy, so to speak, back in March of last year, and we switched into a virtual economy as of March of last year. And obviously, you see where that economy has taken the stock market, and with interest rates continuing to be very favorable for, you might say, the elite to be able to borrow literally at zero interest rates and take our money and go out and buy their stock and make fortunes. I'm not sure how long that's going to last. This has created the biggest wealth gap in the history of the financial markets, in the history of this country. So again, I think we've taken things to an extreme, and like the reversion to the mean principle, things will adjust. Things will get back to its mean. And that's what the markets are trying to find right now. Where is that mean? So that's what's causing a tremendous volatility, because every sector in the economy, as a consequence of this pandemic and the effect of the lockdown and the effect of the tremendous collapse economically, in terms of consumption, in terms of just being able to have a normal life, has really, you might say, done very deep damage. And I believe in some cases, some of these people are not going to be able to come back. And so, unfortunately, for some, it is a very painful situation. But for those that are looking at this as an opportunity, particularly for the millennials that fall into that category of the Zen generation, that I believe are now obviously taking a look at things, hopefully from a different perspective. But I really think that for the young generation, what happened here has opened up just incredible opportunities. And obviously, the crowd of Reddit, which is, I believe, primarily the millennial crowd, or uh, the virtual, you might say, crowd, heavily involved in Bitcoin, virtual currencies, is a new entity that I think the financial markets, need to deal and need to look at seriously. So volatility causes opportunity. Crisis is an opportunity. And I've chosen to focus on the precious metals in silver and gold because it is money. It's real money. As long as I've been around, and for thousands of years, whenever we've had monetary economic chaos, particularly currency devaluations, gold and silver has come to save the day. There's a lot of skepticism right now in terms of Bitcoin becoming the new currency. That again, I don't think you can take an asset that's been around for thousands of years, that has proven itself time and time again, and just throw it in the basket. Bitcoin hasn't proved itself yet. Yeah, it's proved that it's got a lot of volatility, but what economic, contribution is it going to make besides just, going up 1,000%? It can come down 1,000% as well. We're already seeing that. Those kinds of moves. If you can handle the risk in that asset, well, good luck to you. Then you can continue to trade Bitcoin or virtual currencies. But I will make you a bet is that eventually, when logic sets in and people really take a look at what's going on, there is nothing else out there but gold and silver that would save the day. And whatever entity, whatever trader, whatever country has the most gold will lead the way. No question about it. $18.05.10 traded in gold. I like what I see. Good steady buying coming in here, a little, good steady buying. And I think if we're able to once again get above this 18.22 or 18.10 initially, it's going to put the gold market into a bullish trend momentum. Very difficult time keeping the gold market down. Very difficult time. $1,800 handle is a solid handle for the gold market. The Emini S&P has reverted back from the high 39.59 all the way down to the bottom, the extreme below the mean. And it's activated actually what looks to be a pretty strong signal here after making a low of 38.04. From a daily and a weekly signal, it activated a buy trigger at about 38.35 at about 7 a.m. And so we're in that buy mode here on the mini. The target is 38.54. $18.0650 bid in the gold. There's good buying coming in here. It's in the stock market and in metals, it seems. It's a great opportunity to add to the long side this morning here. The dollar index here has been coming down, and we've come down below the 90 level here just a few days ago, and it seems that we seem to be forming some kind of or trying to form at least some kind of a bottom here. Either that or it's just a consolidation before the market continues to make new lows here. It seems that we are in a downtrend, and that's obviously pretty supportive for gold. For the metals, basically. I know there were a lot of interest in some of the other metals here, silver, platinum, palladium, and, again, if you are comfortable trading, as many markets as you can, good luck to you. I'm here trading markets that I personally choose to trade, to monetize on, to teach, to coach. And, trading for me more than 4 markets personally is, I think, very challenging, as for many traders. So you can't be in every market all the time. I think you have to make a choice, make a decision, look into the instruments that are available within that sector that you choose to trade, and then you can design the risk. You can see how you can manage the risk according to those instruments. But personally, for me, I can't be in more than 4 markets. I mean, to be honest with you, I specialize, for me, in if I focus on one thing and one thing only, I can become the best at it. And that's the reason why I choose the gold market, because it is a very important sector. It's a commodity. It trades as a hedge, as a safe haven, as a hedge, um, against monetary crisis. It's an economic indicator as well as a commodity that is based upon supply and demand. There's only a limited amount of gold that can be produced or is produced, just like silver. These are natural products. Good interest in the derivative markets as well here. Um, we seem to have slowed down the correction here, and now obviously trading above this 2758 signal here. It probably is going to consolidate, let the options expire, and probably make some kind of a bottom here as these options expire. So I'm comfortable, holding my long. We obviously, you see here, we got a buy signal on the daily in silver, and the target is 27.96. You can use 27.58 as your, if you are a conservative trader, you can use it on a close below right away, or use the dollar maximum stop according to your profile, as I said, or just wait till the end of the day, depending upon how you want to manage that risk. 1809 in gold, 1809 in gold. We're again, we go through 1810, and we're going to be looking at the average price. Even if we take a look at the chart here, I have the monthly levels on the right of the chart, and I also have the annual levels here on the left of the chart, as well as the 9-year cycle. And if you take a look at the chart, the market came down to the low of 1759, which was below the buy one monthly level, and when it closed above it, it activated a buy trigger. it took a little while, obviously, to begin the momentum, unfolding the momentum of the algorithm. And when it unfolded the signal, like right here, for example, automatically the target above was activated of 1810. And you see the target being completed. And, when the target completes, particularly the average price, then you go neutral. You let the market trade around the average price. I do not trade the average price simply because in terms of the futures contract, it gets very choppy. It can trade back and forth, up and down, above or below. And as you see here, it gets very choppy. A lot of fake outs up and down until the market either comes down to the extreme below, as it did at 1757, but it came right into the level that we've been expecting to add to our position. So it wasn't a surprise. And also when the market came down into that 1771, the algorithm tells you that the area between 1781 and 1713 is an area where you can expect a lot of buying to come in. If it does go down there, if it does offer the supply or the sellers that would be able to bring this market down. But you can see here, no, they couldn't. There was no way they could get down below 1759 because that's where the strong hands, the strong buyers came in. 1759, we're trading at 1808. Right into the mean. Choppy, choppy, choppy. Hold on to my core. Hold on to my long term. Use these corrections to add liquidity, make a short-term profit if you do take the short or hedge or capitalize on it short term. If again, according to your profile, then you take that money and you continue to buy long-term assets. So getting above 1810 now is going to activate a bullish trend momentum. So another day where the market is trading around the average price, and for day traders, there is no signal here. So we made a nice change overnight. Recommended last night to my private subscribers in my trading room, basically to hedge short term, and we do that basically by trading dust. One of the things here that I want to share with you is that as a courtesy during this hour, I share a lot of information in terms of the VCPMI and all of that, but we do have a lot of material available for you if you're a serious trader and you want to investigate what else we do here. Please reach out to Ticket Talker. We can certainly give you a trial to a lot of the products that we offer, but I do make a point of using this private trading room to guide and pretty much help my my traders, my subscribers, in terms of the application of the algorithm. So I'm trading actively myself, and again, if you want to take a look at the track record, you can go to EMA to trade MontesDeOca.com website. This is our new website. And check out our services, check out the live trading room, and also check out the live trading record. This is the performance for 2020 with a starting initial capital principal of 250,000. We realized about 1,746,269. We are carrying open positions in hedges of about 670,000. So we netted net liquidating value 1,076,081.50. Net profit was $826,081.50. That's a 330% return in 2020. We're updating the track record so that it can reflect 2021, and so far it looks pretty good as well. So, but what is important to understand is that the way that I manage the risk is a little differently. Obviously, everything depends upon your profile. The way that I handle risk might be a little more aggressive or less aggressive than you is, but it will be different. Every trader is different. Not every trader is homogeneous, and you can customize this algorithm to suit your style of trading. No question about it. As I said, it's like a GPS that pretty much I use it like I am sharing the information with you live in real time. 1809.40. If we go through 1810 here, we're going to accelerate. All the way probably to 1821. Let me take a look at the daily chart here, because this is a formidable, very defined descending wedge, and this is a very, very bullish indicator. And I want to just kind of analyze the wedge, because we've came down to test that wedge at 1759, the bottom of the wedge, or the support level. And you see here that it's tested it 3 times, making a new low and eventually reverting that very same day with a key reversal and a buy trigger, activating the monthly signal. So we've been in a buy trigger on a close above 1783 in gold. And just now it completed the initial target, the first target, which was the annual average. Once the signal is activated, regardless from what period you're using, the target becomes the level above, regardless of what time frame you're using. But that price level becomes your target. So it activated here a buy trigger on a close above 1783. Automatically, the target was 1810. That's $27 signal that it gave you. Now, again, that signal is neutral, as you see here, trading around the average and consolidating here. But again, closing above 1810 activates a bullish price momentum all the way up to 1874 as the initial target. And then, of course, you take a look at the upper end of those ranges, so to speak, monthly in 1942, 2035, and eventually the annual target of 2164. So these are the levels that I think we're going to accomplish here in the near future. In this year, for sure, I believe that it can be accomplished. I would say between the fundamental picture that is being developed or has been building up here economically, when you add the pandemic, lockdown, loss of supply, shortage of supplies, the supply chain broken, it's very difficult not to look at the fact that prices are undervalued tremendously, particularly the silver market. So 1810 traded, I feel pretty good that we're going to be able to pick up the bullish uptrend here. So prepare for acceleration on a trade above 1810, on a close above 1810. It's still early, and we've reverted already back above 1810. That's a pretty good sign, guys. We're under plus already. So I hope you got rid of all your shorts and you put them in the washer. Sorry, that's a crude joke. Anyway, if I was a short, I'd be pretty nervous. I'd be very, very nervous here. The momentum of these markets are pretty much, particularly for the silver market, like a pressure cooker. And I just wrote an article actually for the Associated Press and for my private subscribers entitled Silver is like a pressure cooker of manipulation. And you know what happens to a pressure cooker when it explodes? It blows up, it blows the roof. And I think the silver market could be headed in that direction rather sooner than later. What I'm doing here, guys, is pretty much trading this. I'm not looking to pontificate or hypothecate or get involved with the chatter and the rumors and all of this stuff, as much as showing you how I use this trading tool, this probability tool, to actually trade the market. What I'm doing here is I'm executing the intelligence. I'm teaching you how, and it can be done according to, again, your profile, how you drive this puppy. Yeah, we recommended earlier to buy trigger and silver. We're up about $500 here for the day. If you follow the signal, whether I'm trading simulation or not, I'm trading for real. This is a real signal that if you are a self-directed individual, could have taken and produced those results. But I'm showing you here how, again, executing the signals, we can produce, $500-$600 for a day trade. Since we've been live in here. And by the way, the performance that we have on the website has been documented live for over 250 shows that we've done, where I've pretty much have executed this intelligence. I've recommended our audience to follow this intelligence, and the results are there. And you can see it here in real time. You can see the profits being made. And so this is as real as you're going to get. It's as real as apple pie. And that's kind of getting me hungry. 18, 20, 21 is the target for the day here. If we can get through this resistance of this channel here, I think we'll be in good shape. So we got, the rest of the day to trade the market, but I think we pretty much have expired the options, the 28 calls, 2750 calls, 2775 calls, all the way up to 28 from 2750 look to be at pretty much expiring worthless. And that was where most of the volume was located. If you take a look at the COMEX position in terms of expirations for these options, this is where most of the calls were located, were concentrated on. So it looks like they succeeded again. When I say they, the short side of the market succeeded again to allow those calls to expire worthless again on expiration day, which is almost, it's almost like a set procedure on expiration that they kill all these calls like this. And upon execution of that strategy, the market bottoms, and we usually see a favorable rally from there. And I am expecting that to be the same this time around. Just to review here, obviously today there was no trades here, but I think we have come down, completed this correction that essentially was expected upon expiration of the silver options. And now the market, as you see, based on the variable changing price momentum indicator, has activated a buy trigger at 27.63. 27.58 is your protective level. Your initial target is 27.96, or any time between 27.58 and 27.96. You can follow the position with a trail stop or choose to take your profit, at your convenience. But you are in the right direction. Stay in that direction unless you get stopped out, and then choose to manage the intelligence accordingly. Thank you again, ladies and gentlemen, for the opportunity to share this with you. And once again, I really sincerely hope that you becoming a better trader every time that you come here. Have a great day. Be safe. I'll talk to you soon.
The risk of loss in trading commodity interests can be substantial. You should therefore carefully consider whether such trading is suitable for you in light of your financial condition, and considering whether to trade or to authorize someone else to trade for you. Past performance is not necessarily indicative of future results.
Folks, John Najarian here with Steve Collegian, co-founder of Ticker Talker, and here we are.